Good evening, everyone. Welcome tonight. Thank you so much for joining us today at our Young Professionals Network program, Blockchain, the Revolution in Decentralization, collaborate with the Korean Startups and Entrepreneurs Association, KSC. My name is Chloe Byun, and I'm the Development Officer here at the Korea Society. So tonight we have 4 distinguished panelists joining us for the discussion. Matthew Getz serves as Chief Executive Officer at Block Tower Capital, a leading institutional cryptocurrency investment firm. Min Kim, having over a decade of experience in financial and technology industry, is currently serving as Foundation Council member of ICON, one of the largest blockchain networks in the world. We also have Hee-Sup Shin, who's the General Counsel of Korea's first cryptocurrency exchange, with 17 years of experience in investment banking as a senior legal counsel. Last but not least, we have Daniel Wu, who is a partner at Fox Rothschild, where he represents emerging growth companies at all stages of development and the venture capital firms, private equity firms, strategic investors that finance such companies. We're also delighted to introduce Natasha Banks-Kopel as the program's moderator. Natasha is the co-founder and chief operating officer of the global award-winning fintech platform, Dark Matter. So now over to you, Natasha.
Awesome. Thank you. Thank you, everybody, for joining. And thank you to our panelists for being here today. As Chloe mentioned, my name is Natasha Banks-Kopel. I am the Chief Operating Officer of Dark Matter. And many of you may know my co-founder, Sang Lee, who is also the president of KSE. He's actually traveling in Asia for some investor meetings. So I am here today to cover the scene and to work with these very esteemed panelists here. So we're going to kick off the session by really letting them introduce themselves and then diving into some key questions about the crypto market, what's going on, and essentially what about Korea is so important within this market and why all of these panelists have roles with what's happening in Korea and crypto. So I'll start off with Matthew, and I'll kick it over to you to introduce yourself and tell us more about you.
Short version or the long version?
Let's go with the medium version.
Hi, everyone. Thank you for having me. Very excited to be here. My name is Matthew Getz. We launched Block Tower last summer, so almost about a year ago. I'm having some fond memories, particularly this week with things like the Consensus Conference and other things going on, as really an institutional investment firm that thinks about the emergence of everything that blockchain technology and associated cryptocurrencies enable, and what does it look like to prudently, professionally, and responsibly invest across that. Prior to founding Block Tower, my co-founder's name is Ari Paul. He spoke at one of these events before, so some of you may have seen him. Prior to us embarking on this journey, I was at Goldman Sachs for 11 years. Most of that time was spent here in New York, helping lead our institutional asset management business. So the part of the firm that thinks about investing in asset classes, investment strategies, really globally, and thinks about how those types of strategies come together within investment portfolios across everything, really, from strategies, whether it's quantitative, fundamental, private or public markets, equities, credit, et cetera, real estate, and also kind of globally, obviously, with offices all around the world. And I think there's a lot of parallels in cryptocurrency because this is a global market. And so having a global lens into that's really important. Prior to Goldman, I was an engineer in the energy industry. And that's my story. I studied engineering at the University of Illinois and did grad school here in New York at NYU.
Awesome. Thank you. Thank you. Min?
Hi, everyone. So my name is Min Kim. I actually wear 2 hats. The first one, I'm a Chief Strategy Officer of a daily financial group. We are a fintech holdings company in South Korea. So in 2015, I was living in Silicon Valley. I got a call from a friend to ask me, hey, why don't you come over to Korea and help me start a fintech company? So Right from the bat, we raised about $100 million in equity, and we went on an acquisition spree. We acquired several companies and incubated a few companies, and today we have about 25 companies under our corporate umbrella, where we do everything from robo-advisor to P2P lending to payments, and we also own a cryptocurrency exchange called Coin One Exchange. And with this exchange, what was very fascinating for me in particular, because I lived in Silicon Valley and I hear about Bitcoins all the time, but never really looked into the technology behind Bitcoin. And once I discovered this blockchain technology, I convinced our executives to actually start a enterprise blockchain company in South Korea called The Loop. And it's a joint venture with 3 universities in South Korea, and we target just financial institutions and universities and hospitals, and just sort of expanded throughout the years. But while working on this, we decided, hey, we should also start a public blockchain company or public blockchain project, and that project became the Icon project. So what is kind of unique about our situation is that we sort of do 3 things. We have a cryptocurrency exchange, we do enterprise blockchain where we work with a lot of enterprises and companies that are very interested in blockchain, and we also have one of the largest public blockchains today. So we sort of have a very unique view of what is happening, what the trends are around the world. And most recently, I moved from Korea back to San Francisco, where we're starting to expand our businesses here.
Great. Awesome. Thanks, Min.
Hello and 안녕하세요. My name is Hisop Shin. I'm actually from Australia, but I've been living in Korea for about 18 years now. I'm a lawyer by trade. I've been working for various investment banks, doing legal and compliance. But I sort of got into this crypto coins and blockchain just by accident. I probably have the least amount of experience out of all the panelists here. What happened to me was that I was in between jobs last year, and then I was enjoying some time off, and then I met somebody who was telling me that they were making a lot of money trading bitcoins. I said, "Wow, what's that?" So I did some searching on the internet and said, "Wow, this looks great." So I bought about half a bitcoin. At the time, it was about $300, maybe $400. And as soon as I bought, the price started dropping down. So I got really curious. I'm going, I got to know more about this. So I started searching a little bit more on the internet. Then I saw this ad for a job, and it was the company that I actually bought the coin through, and they were looking for a general counsel. So I said, well, maybe I'll just join the company and find out a little bit more, right? So I told my wife, I'll just stay there for 3 months. That's it, right? But I ended up staying for a whole year. And what got me interested was that when I actually joined the company and started looking at how they operate, was very similar to securities trading. So it was pretty much like buying and selling stocks. So I saw that, probably within few years, I think this space will probably get regulated because there were so many people buying these things. So I said, well, it's probably a place where I can probably add value, because of my background in legal and compliance in investment banking. So as soon as I joined, about 3 or 4 months later, that was sort of last year around November or December, suddenly the market took off and everyone's so interested, and all the government officials are all ringing me. So suddenly I become a crypto expert in Korea after 3 months.
Popular one, I'm sure.
So now I get called by the National Assembly, the financial regulators. Suddenly I'm just going here and there, and now I'm here.
So you have all the answers, in other words, right? All right, and that was
I'll step
Corbett.
off the stage now.
Right, exactly. This is going to be now his session. Yeah. Okay, and I'll pass it to Daniel.
Yeah, my name is Dan Wu. I'm a partner with Fox Rothschild. I'm a corporate securities lawyer. I work primarily with emerging technology companies and venture capital firms. And my first exposure to Bitcoin was about 4 years ago. I had a client that was doing some Bitcoin mining software. And I remember him telling me about it, and it just seemed like a fairy tale that they had these machines and they were hooked up to something. They were literally mining valuable coins, Bitcoin. So that was my first mention of Bitcoin. I was so busy then. I should have bought then. I didn't. I was not as smart as he saw. I should have bought a little bit and participated. But then I got reintroduced to Bitcoin actually through a very good podcast series that Matthew was a part of. So when I saw him on the list, I was very excited to be on this panel. I shouldn't be on a panel with Matthew, but you guys are in for a treat. So so that company that I mentioned got funded by Tim Draper. And some of you know him. He's a very prominent venture capitalist. He's probably one of the biggest investors and cheerleaders for blockchain and how it's going to change the world and things like that. So, when you go home, you can look up Tim Draper and watch some videos, and it's very entertaining. But more recently, as a corporate securities lawyer, and I'm from Los Angeles, we get so many inquiries from companies that are trying to apply blockchain to new business models. We also represent a bunch of investors that are starting crypto funds and crypto hedge funds to invest in this space, as well as a few clients that are interested in starting a crypto exchanges. So I'm in and around this space, and it's a very exciting time to see another technology emerge that some say will just be just as important as the emergence of the internet in the early 1990s.
Great. So thank you all for introduction. So let's just jump right into it. So this first question I'm going to pass off to Matthew and then go get Min's perspective on it as well, which is kind of what are your general thoughts on the current state of crypto and what's up with all these price fluctuations? What kind of things can we draw from this? What are your perspectives on where we stand now and kind of future outlook? So I'll pass it to Matthew first.
Sure. So I think what's up? I think, very exciting time to be involved in this space in any way. This is a new transformative technology. This is the emergence of a new investable asset class. I think those things are unusual. They're rare. They bring with them a lot of interest and energy, and you have a lot of ideas. You have a lot of people. You have a lot of capital that move into the space very quickly, and we've seen that over the years, and we obviously saw it in a very pronounced way last year. And I think one of the unique things about this as an asset class is, yes, it's early stage technology, but this isn't buying equity on the cap tables of private companies and startups. These things, these tokens, these coins, these currencies are or become liquid and publicly traded, and obviously they're hyper volatile. So what's the right way to think about approaching that as investors? What's the right way to be thinking about approaching that if you're a technical person, someone talented engineer, someone who's thinking about going to build the next great thing? I think there's a ton of opportunity there. And what we saw first sort of resembled some of what we saw here in the US in the 1990s, is one of the mental models that I like to use, where you had a new concept with the internet. You had a lot of people sort of rush into the space to take advantage of that, some opportunistically, some not. So I think it's very important to be careful. It's very important to do research. But similar to the 90s, if you were there in the early 90s, the people who were building things or starting internet companies then were really talented, really convicted, and really believed in what they were doing and building for the long term. Like, they had the most genuine of intentions, and that was evident because they were doing something before people even understood what it was, or there was any sort of like frenzy around it. Then you saw some of these companies get funded. You saw venture capital start to come into the space. Maybe you saw a few successful sort of outcomes, and you then saw supply and demand sort of rise in tandem. So you saw other investors, venture capitalists, and others say, wow, there's something interesting happening there. We should all kind of point ourselves in that direction. And then when you have more capital pointed at an ecosystem, or more sources of capital, you have more supply rise to meet that demand. So you had more entrepreneurs kind of flock into the space, try to start .com companies. And invariably, when you have this sort of thing happen, the quality diminishes. So you had these really high quality early believers, similar to how in this ecosystem, you had early developers who maybe have backgrounds in cryptography. Maybe they were working as core developers on the Bitcoin protocol or one of the other early projects. And then all of a sudden, what did we see last year? We saw sort of a parallel to this sort of rising supply and demand concept that I just described, where others started flocking into the space because it became viewed as potentially easy money. And with that comes risks. With that comes lower quality ideas, harebrained ideas, things that should not be happening, all within the context of something that is brand new for investors, for regulators, and for people all around the world. Because again, this is global, and I think that's one of the things that makes it really unique. In that you have sort of this thing growing globally, but at different rates and under different regimes. So I think last year you saw a lot of this kind of pour into the space. Now, fast forward to where we are, I think you're starting to see really high quality talent look and say, that's the space to go build the next great thing. These are people who are successful entrepreneurs who maybe have built great companies, some of the most talented engineers who are here in the US, in Silicon Valley or some other place. And they want to come into the space to build exciting products and technologies, but having regulatory compliance and understanding the framework in which they're building it, I think is a really important part of where we're at right now. And so I think the sort of hysteria and frankly risk that came with a lot of the activity last year, I think you're going to see some of that start to shake out. In fact, you already did, and I think that's really healthy in the early part of this year. And you're going to start to see higher quality teams, higher quality projects do things in less of a fly-by-night way and in more of a high-quality, regulatory compliant way in whatever jurisdiction they may be operating in. And yes, the volatility hasn't gone away because these things are liquid and publicly traded, and predominantly retail investors are the ones moving the price. It's set by the marginal buyer. As someone coming from the institutional world, I think that is also going to continue to change as the institutionalization of the market via infrastructure, market structure, and market participants continues to evolve. And that's going to be one of the stories of 2018 as well.
Great. Min, do you have anything to add to that?
Yes, sure. So I think Matthew did a great job of comparing this to the internet, and we've heard a lot blockchain compared to the early stages of the internet. So I completely agree that we are at a extremely early stage where not a lot of, I guess, quality talent has been there, and that is starting to change drastically. In terms of like analogies, I mean, I started my career as an investment banker in the technology space, and I've seen disruptive technologies come and go. And I still remember back in the days where when the iPhone first came out, and very initially some of the applications that were built on the iPhone were native applications. And I think we are at that stage where a lot of the protocol level companies like Icon, we're starting to develop these native applications for our own chain. And we're trying to still figure out like what are the right applications, how to build them, things like that. The next level are these what you call decentralized applications or dApps. And I don't know if you remember, but way back in the days when you saw like a one or two college students like make games, and these games were top of the charts and the most downloaded games, and they were like horrible in quality if you think about it today. But now if you see some of the games, they're amazing. So the quality bar has gone up drastically over the past year. So I think that's what you can expect. Right now, you see smaller teams that are just experimenting, and that's a good thing. It's a good thing that a lot of people are experimenting with these smart contracts and just sending codes and making what a lot of people are laughing at, like something like crypto kitties. But I mean, these are great experiments, and we will continue to see like better applications on top of these protocols. So now, we are attracting tremendous talent in Silicon Valley and in Korea and elsewhere. And what you can expect from years on out is these like great minds are starting to wrap their hands around or heads around blockchain, and they're starting to get a feel of it. And a lot of smart people are starting to work together to build something even better. So we're still in that early stage of like very smart people starting to learn how to appreciate and think together on this. With your second question about price volatility, um, Matthew definitely knows a lot more than me because he's on the capital side. But from what I see from my experience is that I think the volume and the is extremely low if you compare to the equity world. And I think the most recent article that you saw today, if whoever owns the Satoshi Nakamoto account sold everything, it would just crash the Bitcoin market because it's that new to the space. So I think as the industry grows, you will see more participants, more people who are trading. The volume will gradually increase, and you won't see as much high volatility. And with the institutions coming into the space, we think will create a much more efficient market. But today, the volatility is there because the market reacts very, very quickly to just simple news and one or two people who could just manipulate the market easily. And there are a lot of bad actors out there, and that's what we don't need. We need to do a better job of educating the public about the positives. I think it's starting to work where, like for example, for the icon, we release like more news, and the market doesn't move as much as it used to be. So we are starting to see, I think, some gradual improvement in the trading space.
Great. So let's shift gears a bit and talk about the regulation in the space. So on a general scale, when people hear regulation in blockchain, there's a community of folks who scream and go one way and don't want it, and then you have a community of people who are proponents of it. And Dark Matter is one of them that are proponents of it because we believe more regulation really will help even out the landscape a bit and take out some of these bad actors that probably have no role in being within the community. So especially from the two lawyers' legal points of view, I'd love to hear more about what changes in regulation or what kind of watchouts are you seeing as you're talking to people that you see are kind of clear red flags, and what are kind of some anticipation of regulation that you're looking forward to that will impact the industry a bit more.
Well, from my experience, just looking at the Korean market, Korean government was very friendly to this blockchain and crypto industry early last year. So they actually wanted to promote the blockchain industry as a national priority, that sort of thing. But then the market really heated up towards the end of last year, and a lot of people just basically speculating buying these coins, right? And so the government was very worried that this is going to turn out to be another sort of a scheme that everyone's going to lose their money. So then the government turned around and they said, look, we don't want to regulate this industry because if we start regulating this industry, we might give some impression that it's legitimate. So then it's going to generate more interest and people are going to start pouring in their money. So they did a complete round of about face, and January this year, they started sort of doing indirect sort of regulation, I guess, via the banks. Because for our business, which is crypto exchange, we basically need our users to deposit money and buy these coins. But the regulators basically told the banks to, sort of restrict banking relations. So a lot of the exchanges in Korea are having a very difficult time at the moment. So what we've been trying to do was that we're trying to tell the government that, look, this is not something that's going to go away, because at the moment there's over 1 million people trading these coins. Now, there's, a lot of people have different ideas. Some people call this is the next, next thing, next cash, right? Some people call it's just, it's a half and puff.
Right.
But from my point of view, it's an asset where people invest their money, right? And they buy and sell. And to me, that's something to do related to finance. Rather than people to try to actually define what it is, I think, that we can probably do a little bit later. From my point of view, I think it's important that we sort of protect people who buy and sell these things. So what the Korean exchanges did was that we got together and we created a industry association. So we come up with a self-regulation. So we implemented some industry code of practice, so that we ensure that clients' assets, we have adequate securities, we have segregation of assets, customer service, and all that. So we try to promote the industry so that it's going more towards your traditional sort of financial institution. But I think the regulators around the world are a little bit uncomfortable about how to sort of deal with this new industry. So particularly, for instance, ICOs. As Matt and Min said, there's a lot of smart people working on this new technology. But for them to actually work on these things, they need to raise funds.
Right.
And traditionally, they used to go to a venture capital to get these funds. But now, because they do these ICOs, they can raise their capital through like everyone around the world, right? So it's a great way to sort of promote new sort of enterprises and businesses. But then it doesn't really have that investor protection. There's no prospectus. There's no, they put up these white papers, but average mom and dad, they have no idea what this thing is, right? So that's why. But regulators are sort of a bit uncomfortable about sort of regulating this thing as well, because I think principally they have no idea. Because I go talk to the financial regulators, and they don't have the ability to go through the white papers and tell whether this is a scam or not. So they're very reluctant to sort of regulate that. So what the exchanges in Korea we try to do is we try to sort of fill that space and said, look, we'll do the sort of the filtering ourselves. So the exchanges, we created a sort of industry association, and we try to come up with some sort of a method where we can actually evaluate coin listings and things like that. So I think the way it's going to progress is that the self-regulations will eventually become a sort of a basis for regulation. So I think that's why it's important that any exchanges around the country, around the world, should form some sort of an industry association and start doing a sort of good practice and come up with some sort of own self-regulation. So I know that Japan is sort of a little bit further ahead than Korea. Swiss, I think it's much the same. I'm not sure what's sort of happening in the States, but we try to sort of base a little bit more on Swiss and Japan. So we're working sort of closely with them as well at the moment.
Awesome. Great. Daniel, do you have anything to add?
Yeah, in the U.S., 2017 was a watershed year because of these ICOs. Coin offerings. You probably heard about them. So unlike startup companies that go to venture capital that layer in the investment, right, based on their growth and milestones, there were startup companies that went out and were able to raise, for example, like $30 million without a product, just on a white paper, right? So it's an opportunity. You can see if you are a legitimate entrepreneur, that creates a very attractive. That creates a very. Can you hear me?
Yeah.
Hello?
Yeah.
Yeah, that creates a very attractive incentive for entrepreneurs, legitimate ones, to be able to raise money and not feel like they have to please a very small group of venture capitalists that are gatekeepers to capital, for example, right? So because of the success of all these ICOs, the SEC finally got aware of all this that was going on and the potential risks of unaccredited investors. Now the SEC it was formed in 1933 to protect the retail investor, right? Because of all the abuses that led to the stock market crash. So you can imagine that now, because of all the news of Bitcoin and ICOs in the news, they made some pronouncements that, for example, that some of the tokens that were being sold as part of the ICOs were in fact securities, right? And so if they're in fact securities, they can't be offered to the public without an exemption or without registration. So a lot of companies are not happy about that because one of the sources of the capital were unaccredited investors. Anybody that was excited about the technology and had some money, they could participate, right? So right now there's a little bit of a standstill because there are stakeholders that are asking the SEC to reconsider their position, either to offer a safe harbor that allows certain companies in this space to make securities offerings to keep the money flowing, to keep the development going. And right now, the SEC hasn't made a very firm, given firm guidance. But I find it interesting that if the ultimate aim is investor protection, I find it curious that in the U.S. here we just legalized gambling, right? And so in the U.S., not that investing in these projects is like gambling. There's a lot of risk, but there's something that's off there. I guess in this world where information is widely disseminated and people know the risks, may know the risks, or just know that there are bad actors and it's buyer beware. I believe that there's got to be a middle ground where your everyday retail investor either lower the limits of what it means to be an accredited investor, or maybe have accredited investors go through a process of making sure that they're aware of the risk or qualify to become somebody that can invest in these types of things. But right now, legally, I think if I was advising a company, right now you can still go raise money if you're a legitimate company with a great business model to accredited investors. And now there are websites and groups that pool accredited investors that's outside of venture capital. So that opportunity is still there. But for now, expect more regulation, and also expect more regulation, which I see perhaps it's a positive step, is because the regulation will bring in more resources and more institutional investors. And so that you will feel that this industry will have proper corporate governance, and that your money is protected, and there are standards so that it's not just a black box of you putting in your money away.
I was just going to piggyback on that with two quick comments from the U.S. perspective, all of which I agree with. First, actually on Korea, I just got back from my first trip to Seoul, and I agree particularly on the self-regulatory front. There's been a lot of really good things done in Korea, and I think that same sort of thing is important to happen here. So more regulation is needed. It's helpful. We want to help enable that for investor protection, and work with regulators, work with institutions, work with industry to build the infrastructure and tools that will bring that. And then on the self-regulatory front, you're starting to see some real impactful, meaningful efforts get off the ground that are going to bring transparency and accountability to the space, which I think are two really important aspects which with the watershed of last year is important, so that people can have a better understanding what's going on and where the pitfalls and dangers and risks are. So there are some things getting off the ground that are going to help bring that about from a self-regulatory front as well, which is also very important.
Great. So let's talk about this theme of decentralization that, is a core tenet behind blockchain and, which is supposed to be purposeful why people choose, to use blockchain or launch an ICO or, even figure out what they're doing with blockchain technology. So let's talk more about which industries it makes complete sense for blockchain to be a part of and integrated and figuring out what that foundation architecture is and what kind of industries really don't need it and it, isn't necessarily inherently, a proposition of the technology. So I'd love to hear from each of you where you think it makes complete sense and then some places where you think it doesn't make sense at all.
Sure, I'll give a couple of quick examples. I agree with that general framing. It's like there's some people who are very pie in the sky saying, let's decentralize everything, like this is going to take over the world. And I think that is a little bit disillusioned. So I'm a former engineer. I certainly could subscribe to that. But the reality is you don't need 100,000 computers all around the world to verify my $5 cup of coffee at Starbucks. And I think that is a big component of, in the early days when I was first diving into the space, of an example of something that people would talk about. I think there's a lot of things for which a centralized architecture and database could be certainly more efficient, because it's always about trade-offs, right? You can trade security for speed and efficiency, and what are the use cases where that makes sense? Coffee at Starbucks, probably not. Something like a digital store of value where, something like Bitcoin or whatever ends up taking Bitcoin down, if there is something, which is possible. Maybe you're willing to sacrifice some of the efficiency and speed for something where people may be storing large amounts of their wealth or their assets, and they'll pay slightly higher fees, or they'll sacrifice a little bit in the efficiency for the additional security that decentralization brings. And then generally, outside of that, I think this concept of scarcity and a scarce resource, and bringing that into the world of digital assets is something where I think you're going to see decentralization be impactful. Some of this is in new business models that we collectively haven't even conceived of yet. And some of it's where you want some element of a shared resource that you couldn't previously share. So you have projects that are thinking about decentralized file storage, kind of like storing files in the cloud, because the reality is, there's a lot of file storage sitting all around the world on computers and servers that isn't being used. And so can you tap into that through a decentralized system in a cryptographically secure way? I think that is one of the things that we think is interesting. And then you can divulge into what are the different types of coins and tokens that enable these networks, and are they security tokens? Are they utility tokens? There's a lot of people having discussions around this. But I think those are some examples of areas where I think the technology will be important. Putting something on the blockchain, even if it is like CryptoKitties, one of you mentioned that, which sometimes at the beginning these things do look and feel kind of like a toy, but ultimately that's the beginning of what leads to something really interesting and really transformative. And I think CryptoKitties is an example of that, where you have something digital that has scarcity, and you can imagine a lot of other ways that could be applied in things that aren't cats on the internet. So.
Who knew it would be such a sensation? But do you have anything to add?
Yes. So right now we're doing a lot of use cases with our various consortiums. So you hear a lot of use cases, for example, for owning your own healthcare data to identity verification, KYC. But my personal favorite has always been has to do with the public sector. And I just feel that we always tell ourselves that we live in a democracy, but we still don't have the ability to vote for a president and being able to verify your vote like in a public ledger. Mm-hmm. So when you vote for somebody, how do you know that your vote actually went to the right person or not? And just not having that system in place just makes me, wonder, like, is this, like, how, can we even trust the system that we have today? So I think just like at a very simple level, just voting or car registrations to your home registration, looking at the prices, bringing transparency to the system, anything to do with verification and immutability. The benefits of that, I think, is the real benefits of that is the public sector.
Great, great. Do either of you have any additional things to add on the decentralization where it doesn't make sense and where it inherently makes a lot of sense?
One of the clear use cases is I think if you just one of the things I did was after hearing about this, I went to the IBM blockchain site, and they're already working on some of these things, like with global supply chains, or any time where they're doing it also with our food supply. If you want to confirm the origin of anything from food to even diamonds along a process, a supply chain, and there's ways the blockchain technology can help. Obviously, it's a public ledger that offers transparency, and so lots of that type of information can be confirmed along the blockchain. That's one of probably the clear use cases. But I see articles written by very smart people on Medium that will go through it applying to many more industries. Too many that I could sort of speak to. But I think right now it's just the promise of this of that technology that gets people excited, because we're probably going to be wrong about some of these use cases. Some will develop, that are beyond our imagination.
Yeah, agreed. And I think yes, one of the more direct one is really being able to track supply chain where it is from beginning to end, and using blockchain technology for that on a distributed ledger, which makes a lot of sense. So let's talk about, a key question that are in a lot of people's minds here. What should people look to invest in? And what kind of criteria do you think investors should be considering as they look at opportunities in the crypto space for investment? So I'll pass that to anyone who's eager to jump at it first.
I think the obvious answer is Icon. I mean, jokes aside, I think, there are a lot of, great projects out there, and a lot of horrible projects out there that, I probably won't mention. But, I think for me, I think the right way to kind of look at this market, right way to invest in anything is making sure that you invest only the amount that you're okay losing at the end of the day, and you really want to be supporting. It's not always all about making money at the end of the day. So, there's a lot of discussions about scalability these days, like what problems certain blockchain projects are solving. My belief has always been that technology will always get there. You go from 2G networks to 3G networks to 4G networks. Like, it gets faster and faster and faster, because if you have enough smart people in one room, people always solve the technology side of things. I believe the real value of the blockchain is in the network itself, just like the telecoms, where if all your friends are in the Verizon network, then you had the tendency to join the Verizon network. If everyone is using Apple phone, you want to be with your friends, you sort of tend to use the Apple phone. So same with the blockchain technology. I think the power is exponential. It's actually in the network participants. The more that you add in, the more participants you have, the more powerful the network gets. So I think there's a lot of focus just on purely on the technology side. So I'm not saying that the technology is not important. There's a lot of projects that we should be supporting on the technology side, but I think a lot of people forget how difficult it is to get user traction, how difficult it is to get user adoption. So I think always look at like not only just the product, but how many people are actually using it, why they're using it, what's attracting these people or with these enterprises or people of using it. I think that, I think definitely do your due diligence on the business side of things.
Okay. Anybody else?
Well, I can share my experience, I guess.
Love it.
Well, just personal experience. I've been in, this industry for less than a year. So when I first joined the company, all my friends asking me, what should I buy? What should I buy? Right? So what I tell them is that, well, just buy, well, what normally happens is that you buy whatever your friend bought, right? That seems to be the only, only standard for investing in this cryptocurrency, because well, I'm a lawyer. I have no technical background. I have no idea what these coins are about. They're all great. Sounds great, right? But at the end of the day, people just invest or buy these things just based on what your friends buy and what you hear from on the street, right? So, so what I noticed was that, in sort of on the equities market, I guess on the equities or traditional debt, you got these great analysts, asset managers who write 10-page reports and they tell you, what to buy, the recommendations, but there's none of that in this space. So it's basically, it's particularly more difficult with ICOs. If there are coins that's been out there for 3, maybe 4 years, that's easy, right? So you can look at price, you can make, make some predictions whether it's going to go up. But as for like new coins, new ICOs, average mom and dad, you can't tell which one's what, right? So what ended up happening last year in Korea was that everyone was just getting on a bandwagon. If anything just comes up, just snap up in the hopes that I buy 100, maybe 2 or 3 will become a huge hit, right? So the problem now is that, because we're not regulated and there's no one actually providing these services, there is no way to actually, tell which one is a scam, which one is not. So one day I asked my one of my engineers in the company, I said, well, how can I tell whether a new coin, is a scam or not? And you know what he said? He said, well, you can't, because it's only a plan, right? It's a wonderful plan. It's a white paper. It's basically a plan of what the company is going to do in 2 or 3 years' time. So if they are lucky or they are good, they'll get there. But if they're not, if they could be super smart, but if the market is not there, if the market doesn't want their product, they'll fail, right? So he basically said, look, he's seen some projects where initially the people who did the ICO didn't really think the project was going to take off. They were just in it to just scam people of money. But then they realized that they got all this money, so they actually went ahead and developed the product and it just became a successful coin. So he said the only way you can tell whether something is a scam or not is whether it actually gets accepted by the people who invest. So it's very difficult for a person like me to invest in these coins. So the next sort of the step we need to do is sort of have because at the moment we only sort of provide exchange service and custody service. But the next piece is maybe some investment advice, more research, maybe even asset management. So I think that's what a company like Coinbase, I think they're looking at asset management, custody service. So it's more rather than me doing all the work and try to figure out what these coins are. Now you got more these professional people coming in and try to make it a little bit more look like a traditional financial product. So I think you'll probably see within a couple of years' time, you'll probably be investing in some sort of a crypto fund of some sort rather than investing in individual coins. Yeah.
Great. So let's switch gears a little. We're at the Korea Society. It's a great event that partnered with KSE. Let's talk about why, and everyone has has ties to Korea, and you just were in Korea. So let's talk about why Korea is such an important market for crypto, and what essentially is going to be some of the key dynamics in the space or key drivers that has everyone excited about building business there, participating, or really just I a core community there that has to do with each of your businesses. So let's talk more about why Korea and why it's hot for crypto.
Yeah, so I had a wonderful time, was really impressed. I think the comment of this being a global market couldn't be more true as it relates to a place like Korea that can really help lead and drive a lot of what's happening here. I was talking at a conference a couple days ago, and I had a chart up that showed trading volume by country. And for a long time, 2014, 15, 16, most of it was shaded one color because most of the volume, whether it was real or not real in terms of the reported numbers, was in China. And towards the end of 2016, early 2017, the Chinese government started coming out and saying a few things about potential approaches they might take, restrictions they might make on exchanges, trading, and otherwise. And you, around that same time, saw volume really start to grow in places like Korea. And I think there's a long heritage in Korea of thinking about and understanding digital assets, of thinking about investing and trading. And so I think from a markets perspective, it's a key part of the ecosystem. But even that aside, when I was there, I was really impressed and taken aback by the sheer volume of talented people who were applying themselves to this space. And it could be new projects, new platforms, new protocols, things like Icon. It could be this concept of tokenizing underlying assets. So not everything needs to represent a brand new asset or a brand new token in a brand new network, but you can apply this technology to democratize and bring more liquidity into markets and systems globally that previously didn't have it. It's actually pretty amazing to think about how you can take an asset like the building that we're all sitting in, which is illiquid commercial real estate owned privately by one or a few people. What if you could take that and you could make it globally tradable and liquid and enable fractional ownership in a way that could never be done before? That's really, really powerful. So I met with a few teams in Korea that were approaching this concept of the tokenization of underlying assets or underlying securities that I think is just a healthy evolution of where capital markets have gotten to. We've securitized a lot of things in the U.S. We've securitized real estate into REITs, certain credit derivatives and other things. And I think the tokenization of these things in a regulatory compliant way that conform with securities laws is a real big trend. And I saw that while I was in Korea as well. So I think as a hub of both development and investing, trading activity, infrastructure activity with exchanges, you have a lot of leadership there. And I think with the approach that is being taken both on the regulatory side in Korea and the self-regulatory side, I think it just struck me as a healthy ecosystem to be constructive, to help move things forward in a way that makes sense for everyone and that protects investors. Those were my big takeaways from the week that I was in Seoul. And it was eye-opening. It was a lot of fun.
When you look at the kind of the macro view of Korea, you have about 50 million people in population living in the country of Korea. About 20 of them are living in the city of Seoul. And Korea is one of the top ICT countries in the world. It was actually ranked #1. People are highly connected. People use their mobile phones and computers everywhere they go. They use their mobile phones for purchases. They rarely use cash. So it is sort of a perfect environment for any tech companies to go in there and test the market, test their product. And the very interesting thing is in 2016, our exchange, Coin One exchange, we were the first to introduce Ethereum to the Korean audience. We're the first to bring XRP to the Korean audience, and we saw how, just an unknown currency just explode, just through word of mouth and through the mass media that just kind of picked it up, and it just became an everyday discussion that you had with your friends during lunch. So just the sheer potential that Korea brings to the table of just being a dense, very, very connected society, I think is a huge benefit. So you will see a lot more experiments that will be happening in Korea with these decentralized applications, with new protocols. There's the reason why EOS or Quantum and all these companies are setting up offices in Korea, because we all know that Korea is just like is a perfect environment to do this. So I think that's what kind of Korea brings to the table, and I think Korea is a market where a lot of these things will be tested, and I think we will bring or export a lot of that ideas and applications to other parts of the world.
Yeah, but just culturally very quick to embrace new technologies.
Exactly.
Yeah.
Right. Definitely quick to adapt. So you're supposed to be there for 3 months, and you ended up staying
Yep.
there for years. So why Korea? Why is it great for Corbett?
Well, basically, Korea is at a stage where its economic growth is very it's come to a very slow stop, really. I mean, it's GDP growth of like 2-3%. So for a lot of young people, for them to invest their money, there aren't that many avenues. One being traditional property, but if you want to buy a property in Gangnam, a couple of $1 million, can't do that. If you invest in the stock market, you maybe actually get maybe 5% per year, maybe 10 if you're lucky. And then you put your money into savings, you get pretty zero interest. So, and then young people sort of discover these crypto coins. You buy this thing overnight, 50%, and the next day, 100%. And people are so excited, look, this is where I'm gonna invest. They realize it's risky, but from their point of view, they didn't have much money, right? So all the young people suddenly got excited. They're all coming into this, crypto investment, and suddenly all the word spreads out, and suddenly your mums and dads are getting into the act. So that's why the whole thing just blew up, last year, right? So everyone was just lining up to join exchanges and trade the currencies, right? So, and also the fact Koreans are like any other sort of Asian countries, I guess. Koreans love to gamble, right? I mean, it's all or nothing, right? So that's sort of inherent in our culture, right? So it sort of really fit to the it just went well with our sort of culture, right? So rather than going for the traditional safe investment, it's all or nothing thing. So it really happened, I think. Yeah.
Got it. Dan, do you have anything to add?
No, I guess it's a technology and a currency built for Korea or other parts of Asia.
Yeah, definitely. And I think a lot of it really does boil down to a lot of the ability to and the willingness to embrace and adapt new technologies, which I think is a huge proponent of the market. So we're going to wrap things up. Last question. So for each of you, I'd love you to answer what are 1 to 2 things that are really exciting you about this space, and have you energized to be a part of it and continue to build that passion that you guys have for crypto and blockchain. So we can start with you, Matt.
Sure. So I think we've covered pretty well, why we're all excited about the space, how we got into it, its potential, and I think I'll name 2 things. One thing that I'm really excited about is starting to convert that potential into something that people can use, something that people can see. You talk about end user adoption and actually getting to that point. And now with the amount of talent coming into the space, I think you're going to start to see maybe not that right away, but the path towards that become illuminated. So there's this concept of the Gartner hype cycle. And right now in cryptocurrency, most things are on the wrong side of the hype cycle. Like there's papers written, there's things that are instantly traded, there's lots of energy and enthusiasm, but there's nothing that's actually functioning or providing value. You could argue maybe Bitcoin's on the right side of that. It's been around for almost 10 years. People are actually using it as a censorship-resistant store of value. But most of the exciting new things and technologies are still at the very nascent stages. So I get really excited about, one, the talent pouring into the space and pushing these exciting ideas forward that are going to help reshape the world, capital formation, and technologies. So, the way my kids interact with the world is going to be fundamentally different than the way that certainly I did, or people who came up in the internet age. That gets me really excited. And then secondly, I think is the continued institutionalization of the space through market participants, through people building infrastructure, through people like us and others helping to do things in a regulatory compliant way that advances the ball and brings more market participants in. My former employer, there are a lot of people who are really looking at this as something that makes a lot of sense from a business perspective, and that is going to continue in a big way this year. So the first thing I said might still take a while. Like, some people get very disillusioned. They think new tech is going to be like instantly impactful or impactful very soon. Some of this might take multiple years before we actually see it. The space institutionalizing and becoming more professional, I think that's going to move along a bit more quickly. One thing that people talk about a lot is the problem of custody. How do you custody these things? And that's one of the gating items for a lot of institutions. Well, there's a lot of smart people who are working on that now. You have new companies who are bringing very thoughtful custody solutions to the market that I think, we might see within 6 to 9 months. And that all kind of wraps into the institutionalization theme. So those are a couple of things that I'm excited about, both longer term and near term.
Awesome. Thanks.
I have to add, definitely one of the two things is the sheer talent that is coming into this space. And so we recruited a new CTO back in December, and he's a phenomenal CTO, very famous, wrote a bunch of books, and a lot of engineers respect. And just having him as a centerpiece of our company, we're able to attract even more talent into our project. And it's not just us. I just talking with a lot of people out there, and these are engineers that were working for Google and Facebook, very comfortable, that never thought about leaving these high-tech companies, are now beginning to move into blockchain, because it's not just about the money part, it's about changing the world. And I think the idea of changing the world has been, it's very, very exciting. And that kind of, leads me to my next point, is what excites me is the changing the world. We have this opportunity to completely throw out everything that we've learned in our econ classes, possibly. Throughout history, the monetary systems have evolved and changed, and we're at that moment where we could actually influence and change the centralized banking system in a way that that we could create a new system, much fairer system that we can design on our own, that is much fair to the world and that could bring value to the world. So just being a part of this industry is like extremely exciting.
Awesome. So,
Well, I guess what keeps me interested is that I'm sort of using my skills from the traditional investment banking into a sort of a new class of asset, which which the regulators don't really have any idea how they should regulate. And I'm giving a lot of my sort of experience and my sort of, I guess, knowledge in shaping the regulation going forward. And that's sort of very exciting for me, because I can actually sort of shape how these things are going to be regulated, governed. So it's very exciting. And the second one is basically, I was getting a little bit worried about this, machine learning, AI, and my kids got to be out of jobs, right? Then, our company grew 5 times since I joined. So, this is going to provide jobs for our kids. So I recently attended a crypto conference here in New York, and there were about more than 8,000 people. So, this thing is creating jobs. So I think that's going to be very good for everyone. Yeah.
Cool. Very cool. Dan?
I'm interested in what Matt mentioned about the tokenization of a lot of businesses. Also, how decentralization will apply to some of the big giants in the internet, like Facebook, Google, Amazon, whether they will be disrupted in our lifetime, even though right now you can't imagine something happening on that level. But it'd be interesting to see. And I'm also just interested in seeing whether there's another coin that will take down Bitcoin, because it's not guaranteed that it will be the survivor. If you look at, they were the first mover, you could say, but there may be another one. And I was at the Token Summit, and someone had talked about a third consensus and had a white paper. So it's the first time that I'm excited to, after this event, to dig in a little deeper. So it's something you can explore, both the technology and the business models. Very interesting area to look at.
Awesome, awesome. Well, I'd like to thank all of our panelists for the session today. So thank you for playing.